Hi everyone, welcome back to the USCPA classes for Financial Accounting and Reporting. This is part 5 of ASC 842, that is lease accounting. In this video, I'll be walking you through in detail about operating lease, lease measurement, lease liability and lease assets. So let's dive into to understand more in detail.
So let's jump into the third topic, which is operating lease in the books of
Lesser.
lesser, right? If neither of the criteria, that means neither sales type lease nor direct finance lease meet, then the lesser account for that lease as a operating lease, right? So first we need to look at the 5 conditions of sales type lease. If those are meeting, then we should consider sales type lease. If those 5 conditions are not meeting, then we need to look at 2 conditions of the direct finance lease. If those 2 conditions is also not meeting, then only any such lease is being considered as operating lease, right? Lease receipts are accounted for as rental income, or you can say the lease income, on a straight line basis over the period of lease term. Lessor will continue to recognize the assets and charge the depreciation. So when it is an operating lease, so in that case of scenario, there is no requirement to discharge the assets. So assets will be continued in the fixed assets register and lessor will continue to charge depreciation on that, right? Initial direct cost is deferred and amortized over the lease term, right? So if there is any initial direct cost the lessor has incurred, that will be capitalized and amortized over the lease term. Initial and then accounting treatment of operating lease in the books of lessor would be like this. Let's do an illustration. So let's assume the lease period is 10 years. Yearly receipt, let's assume 12,000 in advance, and present value of the lease payment is $80,000, and the interest rate is 10 years, and the life of the asset is 20 years. So what all journal entry you should be making? So this is like 20 years is the life and you are using it for the 10 year. So it is not coming into the sales type lease category, right? And the total present value of the asset has not given, but we are assuming it is the present value of the lease payment is much lesser than the total value of the assets. Hence, it is being considered in the operating lease. But once you have classified any lease as operating lease, how you need to do the accounting? Let's understand that. First is no lease assets or liability is required to establish, right? So there is, in case of operating lease in the books of lessor, no lease liability or no right to use asset is required to recognize. It will continue to be as the fixed assets in your book and you'll continue to charge depreciation over the life of the asset, right? The first entry would be the receipt of cash, because here you're receiving $12,000 as advance. So if you are receiving the advance, but you have not provided the services or product yet, then this is your unearned income, right? Is it your liability? Make sense? If you are receiving any money in advance, so advance from customer, is it liability or is it income?
So it's liability, but that we are not required to recognize any liability.
Say that again.
The first statement says no lease asset or liability is required.
Yes.
But
so what is
liability?
No, what is lease liability or what is lease assets? Lease liability is the present value of the future payment of lease plus any guaranteed residual value. That's what we understand, right? So we are not required to recognize the lease liability. But this is your unearned lease rental. So this is your advance from customer category.
Okay.
Right? Are two different things. This is $12,000. But if you see the lease liability, it should be $80,000, which is present value of the lease payment. Right? Make sense, Gurmeer?
Yes, sir. Yes, sir.
Hmm?
Lease liability from lessee's point of view. Lease asset
Yes.
from lessor's point of
Yeah,
view.
from lessee will recognize 80,000 as a lease liability, whether it's a finance lease or operating lease. But lessor is not required to recognize lease liability in case of operating lease. But
Okay.
he or she has received $12,000 advance. So advance is always be a liability, right? Because you have not provided the product or services. You have not rendered the services. So providing asset on lease is also kind of rendering the services, right? So it should be recognized over the period, right? So at the end of the year, this amount will be recognized as revenue and your lease liability will be reduced. Sorry, unearned lease rental liability will reduce. So your $12,000 of unearned lease rental will be debited, right? Then your liability will be debited. That means your liability is reducing. And at the same time, you'll be recognizing the revenue, which is your lease revenue. So revenue is always credit. Hence the lease revenue is credit of $12,000. Make sense? Make sense? Any doubt here?
Yes, sir.
Hmm.
Basically, it's like cash to revenue.
Yes.
If we that is a strike of entry on our lease
Yes.
rent.
Yes. Yes. Yeah. In a nutshell, you can say so.
सर लेकिन we haven't received the cash ना क्योंकि वो तो in advance में ही है तो हम तो books में दिखा रहे हैं.
हाँ, so first entry we have made in cash to unearned lease rental. So when you have received the cash, you have increased your assets, and at the same time, as you have not rendered the services, you have increased your liability. So it has not impacted your P&L. First entry. But the second entry, when you have already rendered the services for 1 year, you have already given the asset on lease for a year. Now it's a time to recognize the revenue, right? To recognize the revenue, you need to reduce the liability and recognize the revenue.
Yes, sir, got it.
Hmm? And third entry is the depreciation, as this is your fixed assets. So you need to recognize the depreciation on that assets. So depreciation entry is depreciation expense account debit to accumulated depreciation. How you have calculated 4,000? The life is given 20 years and the present value of the lease payment, we are assuming this is the fair value of the assets, or you can say the book value of the asset, right? So 80,000 divided by 20 years. So 4,000 straight line basis of depreciation will be recognizing.
So if we are not recognizing an asset itself,
No,
why are we
you
recognizing?
are getting confused. You are getting confused. No. For example, you have a car, right? When you have purchased a car, what entry you might have made? Assets account debit to cash.
Yes.
Right? So the car is already lying in your fixed assets. Right? Now you have given that car on a lease rental for 1 year at, let's assume, $12,000. Right?
Okay.
So when you have given the car rental for $12,000 and you have received the $12,000 advance, let's assume. So you'll be making the first entry, cash account debit to unearned lease rental, right? And after a year, when the person has already used the car, so you have a right to recognize the revenue. So then you'll be making second entry, unearned lease rental. You'll be reducing the liability and recognizing the lease rental revenue, right? But at the same time in your books, the car is your fixed assets, right? You need to give the depreciation of it.
Okay, so this is all from lessor's point of view.
Yes.
We are not required to recognize any depreciation from lessee's point of view.
No. So these are all accounting since morning we are doing is from the lessor's books. Rahul, Ananya, Prashant, Pulak. Any doubt?
No, sir.
Kashish, good?
Yes.
Okay, so next topic is lease measurement. So lease measurement is basically how to value the lease. So it depends on the lease term majorly, right? So lease term is how much period of the lease is non-cancelable period for which leasee has a right to use the underlying assets together with the followings. Together with the followings, first one is period covered by an option to extend the lease if the leasee is reasonably certain at the commencement date to exercise that option, right? Because he or she may have some significant economic incentive to stay over there. Second is leasee has significant economic incentive to exercise the option to extend. Third is option to extend. The lease is controlled by the lessor. So for example, if you have seen like commercial office lease rental, generally they are for a period of 8 to 9 years, because any big company, when they take any office on a lease, they look at for the longer term period. But in that, generally like lock-in period would be 3 years, and then there is an option to renew and extend, right? So when you look at any lease agreement, there you will see the respective terms and condition for extension and benefit. Let's assume maybe let's assume you are working in any big company like EY, or maybe you're working with like IBM, Infosys, or TCS, or any such big company, right? Now they are planning to set up any new location. Let's assume they have set up a new location in Philippines, Manila, right? So they will be taking a property on a lease, right? So in that property, they will not be just taking the property on lease, but they might be making a significant leasehold improvement. If you might have seen in your offices, right? So your company might have done like a lot of partitions, right? A lot of infrastructure they might have developed, a lot of cameras, etc., or a lot of equipment they might have put, right? And make an arrangement for their respective team member to comfortably work, right? Yes, no? Are you guys with me?
Yes, sir.
Yes, sir.
Right? So it will be very difficult for any company generally to relocate every year or change in every 2 years or 3 years, right? So that is the reason generally those companies take it for a longer period. And generally, if you see the big company, they take their office in the commercials area, which is a big commercials area. If you have seen like here in Gurgaon, like Cyber City, Udyog Vihar, you might have seen like a lot of the companies are staying in the same office from decades, right? The reason is that like that area is good for their businesses. They have already made it significant leasehold improvement, right? And after a point in time, that leasehold improvement, when it got depreciated, but they still are in workable condition, so their cost will go down significantly, right? And if they have to relocate to another office, they need to communicate to all their consumer, all their customers, right? They need to do again the significant investment in the leasehold improvement, right? So considering all these scenario, then you will reach to the lease terms. So you need to consider holistically from the lease agreement what all terms and conditions and lock-in periods are there, and what are the options and benefits available to the company to avail the lease, extend the lease term. So if you have seen any, did you guys get a chance to look at any lease agreement in your life or in your experience?
Yeah, see, basically in insurance, we come across lease agreements while doing like vouching, or if we want to see the terms for the period of
Mhm.
So I've seen lease
Yeah,
agreements.
yeah. So maybe you might have seen the terms of the lease agreement, that maybe 9 year, let's assume, right? And maybe there would be some lock-in period, like minimum you need to be stay there, otherwise you need to pay remaining period rental to us. Is it
Right.
like
Yes, yes,
do you echo with what I'm saying?
yes,
Like
yes.
with this bigger kind of lease arrangement is always being a lock-in period and the penalty clause. For example, let's assume the company like EY is entering into any new lease agreement at a new property, right? So they will be entering into a period of 8 to 9 or 10 years, but there would be at least a minimum lease period, which is kind of lock-in period. If you withdraw the lease before that, then for the remaining period of the time, the company need to pay the lease to the lessor. So that is called lock-in period. Hmm? And after the lock-in period, to identify what should be the lease term for the calculation of the lease measurement. So you need to see what all benefits are being available to the company to stay there. So one is like their increment is comparatively less than the market rate or less than the inflation, right? Or just equal to the inflation, right? If, for example, if you stay at one particular place for 3 years, after that, if you're extending, they're giving you the same place on the lease rate at an increment of 5%, 7%, 10%. But if you change the place to somewhere else, then the jump of the rental would be around 15% or 20%. So it's being more economically benefit for you to stay there, right? Same way, when you are planning to move, then there would be significant cost on the leasehold improvement you have made. That will go to the scrap completely, and you need to make again the leasehold improvement as per your branding styles and comforts and requirement of your staffing, right? So these are all things you need to consider when you are identifying the lease term. Make sense? Prashant,
Right. And sir, if
Pulak.
there's upfront mentioned in the lease agreement that there's a possibility of extension, right? So will that become a foundation for the lessor to provide that option for the extension if lessee asks for the same after the agreement has been completed?
No,
Or
no, it is generally like practical experience says the agreements are generally for longer period and the lock-in is shorter period. So like, for example, if I say about like any corporate lease agreement, generally it is of 9 years, in which you have 3 years of lock-in period, and then after renewable year over year up to the 9 year with the increment of 5%, 6%, 7% every year or 10%, whatever like mutually they agreed. So that's how generally like longer agreements are.
and is there anything which we can see in the agreement beyond the extension of that contract period? So if, for example, a contract is for 9 years, but still the lessor is given an option to extend that
Yes,
contract beyond 9 years as well. So
yes,
does
yes,
that
yes.
become a foundation for the lessor to provide that option if lessee asks for the same?
No. There you need to look at the benefit of both the parties. Like generally this 9 year is a contract, let's assume, and after that, if you see there is a renewal clause based on the mutual agreement by both the parties, right? Both the parties can mutually decide to extend and renew the agreement after 9 years also, right? There you should consider these 3 points. One is period covered by an option to extend the lease if the lease is reasonably certain, right, at the commencement of the deed. Second is the significant economic incentive is to the leasee. For example, let's assume you have taken a place and you have set up like Domino's store there, and now footfall is crazy at that place. Would you like to change your place now? Answer is no, because you are getting the business at that place.
Yeah.
right? So same way, if you are getting a significant economic benefit, why will you change the place, right? Then option to extend sometime is being controlled by the lessor. So it may be explicitly mentioned in the agreement that it is on the buyer if they want to extend the lease. So then they can communicate to the lessor.
And I guess this would have happened while there was COVID. The contract which was ending in the month of March or April 2020, they
Mhm.
would have asked for the extension because of COVID. Because
Yes,
it's
yes,
not possible to move to somewhere else during that time for
yes,
1 or 2 years.
yes. Yeah, very right example. Absolutely true. Cool. Everyone on the same page?
Yes, sir.
So note that the lease terms also include rent-free period provided to the lessee by the lessor. So there may be a possibility that, sometime if you see like here, if you see like, if I give you an example of North India, you see like in the Noida or Greater Noida side, there are many corporate buildings which is being recently developed, and many of them is not much occupied. Their occupancy level is 40 to 45% or at the max 50% to many of those buildings, right? So how they attract to the lessee in their building, they give 3 month free rental to the lessee and request them to start using their place, and if they are liking, then it will go into the lease agreement, right? So in that case of scenario, what is the free rental period you have given? That also you need to consider in the lease terms. Make sense?
There would be
Because
no
nothing.
indication of that in the books of either lessee or lesser.
Yes, yes,
Is
yeah,
actually
I'm coming to that. I was about to say nothing is free in this world. So that period, yeah, that period rent will be considered in the actual rent payment period. For example, like you entered into a lease agreement for 12 months. Let's assume 11 months. In India, you are more used to for 11 months. So lesser says you can use my place for a month, and if you like it, then pay the 10-month rental, right? So what you are receiving in 10 months is actually the rent for 11 months. Make sense?
and if he doesn't like that place after that, after
Then
one
then
month
it's a
is
loss.
completed,
Yeah, then it's a loss.
in that case, nothing will be recognized, right?
Yes, 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 yes. That's a loss. But you can say that's a cost of customer acquisition.
Right. And the 10 month will be distributed across 11 months
Yes.
on promotion.
Make sense, everyone? Pulak, Aranya, Prashant, Manit, you liking it?
Yes, sir.
Good. Okay. So factor and entity should assess in determining the fact that leasee will reasonably exercise the option to extend, include but not limited to. So these are certain illustrative examples which you need to keep in mind when you are evaluating the fact whether the lessee will reasonably exercise the option to extend the lease or not. The first one is contractual term and condition compared to market is better, right? Second is significant leasehold improvement done by lessee, like we were discussing. For example, you are a company like Salesforce, Microsoft, EY. So generally, these big companies do a lot of significant leasehold improvement based on their branding, based on their personal requirements, based on the requirement of their team members or other infrastructure requirement, right? So that thing you need to keep in mind how much significant leasehold improvement that lessee has done. So more the chances he or she will not leave very soon. Next is termination cost. If there is any termination cost involved, like we were discussing for lock-in period. If you terminate the lease before the lock-in period, then you need to pay the remaining period rent. So that's a significant termination cost. So the leasee might not be moving out. Importance of underlying asset to the lessee business operation. Like example, we're discussing of Domino's store. If you have got a place which is in which like extremely good crowd you're getting, right? You would not be leaving that place because it's generating huge profits to your business, right? So these all factors you need to consider for the calculation of the term of lease. Now coming on to the calculation of lease liability and right to use asset in the book of lessor. How do you calculate the lease liability and how do you calculate right to use asset in the book of lessor? First, look at left hand side, lease liability, right? So lease liability and right to use asset will be calculated either for sales type lease or direct finance lease. In operating lease, this is not required, right? You all clear? Yeah, Prashant, Pulak, Ananya, Puneet. Lease
Yes, sir.
liability and right to use asset is not required for operating lease in the books of
Lesser.
lessor,
Lesser.
right? So this lease liability and right to use asset in the books of lessor would be considered only for sales type lease and direct finance lease. How to calculate lease liability? Look at left hand side. Fixed lease payment paid or payable to the lessor, right? So generally the lease rental is the fixed payment, right? So we'll be starting that as a base plus any variable lease payment paid or payable to the lessor. So you'll be adding if you are paying any variable lease rental minus any lease incentive if you are receiving plus exercise price of an option to purchase an asset which is guaranteed residual value, right? If leasee is reasonably certain to exercise the option plus fee paid if any structuring the transaction, which is your direct cost, initial direct cost, then any guaranteed residual value. So all such things combined together will give you the lease liability, total value of the lease liability, which is present value of the current and future payments you are expected to be received is your lease liability. Any doubts so far? Lease liability is clear? Or do you want me to explain one by one more in detail? Yes, no?
Yes, it's clear, sir.
Clear? Fixed lease is clear. What is fixed lease? The monthly rental generally, right? What is variable lease payment? Do you remember from last class we discussed certain example on variable lease payment? Kashish, Gurmehar, do you guys remember what is variable lease payment? Are you here? Or are you gone for the break?
So trying to remember.
Okay. Rahul?
पर वही सोच रहा था क्या था
सोच रहे थे सर हाँ
So why you said you understood? That's not fair. If you are
सर
not understanding,
फेमिलियर है ना, पता है कि हाँ कुछ तो है.
कुछ तो है. No. It should immediately come. Yes, this is variable. So do you remember like that example of like car lease we have discussed based on the miles? Right? Do you remember like if you have if you are running 1,000 miles in a month, then the lease rent is $500. If you are running 1,000 to 1,500 miles, then lease rental is $600. If you are running more than 1,500, then lease rental is $750, right? So this additional $100 or $250 is based on the usage of car, right? That is called variable lease payment.
yes sir, got it
Got it?
yes sir.
And then exercise price of option, that is like if you are planning to purchase at the end, and then fee paid for structuring is initial direct cost, which we have already discussed, and guaranteed residual values, right? Everything summed together and their present value will be your lease liability. And what do you do with the lease liability?
We recognize it in the
We will
books.
recognize it in the books, right? Now come to the right hand side, lease assets, or you can say right to use assets. So right to use assets. So all those things which you have calculated for the lease liability is the starting point. So the lease liability which you have calculated in the left hand side is your starting point. And on that, you'll be adding payment made before the lease commencement date. So if you have already made any payment, then you'll be adding that plus initial direct cost incurred by the lessee. So you'll be adding that to reach at the right to use asset. Right? So this is your right to use asset and the lease liability value at which you need to recognize. Any doubt?
Sir, yes, sir. Sir, yeah, lease liability and lease assets, both we discussed in point of lesser account, lesser books. Okay.
So
Lease liability is from lessee and asset
it
from
will come,
lessor.
yeah, it will come both sides. It will come both from the lessee side also and the lessor side also. But in the lesser side, except the operating lease. In operating lease, this will not recognize.
But a lessee will recognize asset as well. I guess it will recognize liability only.
No. Lessee in case of finance lease and in case of now operating lease also, they'll be recognizing it. So that's like the amendment in the standard. Now in operating lease also, the lessee need to recognize it.
Okay.
Earlier in ASC 840 was not there. But in 842 and IFRS 16, they both required lessee to recognize the right to use asset and lease liability in case of operating lease also. So that's new amendment.
So, sir, in books of lesser, lease liability equal to account receivable.
Yes.
Okay.
Yes, you're
Understood, sir.
right.
Yes.
Cool. So now let's understand.
And in lessees, it's against accounts payable.
Yes. Yes. For
The
them, it's
asset
lease
ones.
liability. Yeah.
Okay.
Fixed lease payment. What is fixed lease payment? Fixed lease payments are those required under the terms of the lease contract. They can be either fixed payment at various interval or the payment that change over the time, such as lease with the scheduled payment increase. Like if you have, let's say, 9-year lease agreement, so there is a clause like every year 5%, 7% or 10% will be increment, right? But the amount is fixed for the particular period of time. So that is called fixed lease payments. Second is leasehold improvement. What is leasehold improvement?
Basically, as we discussed, if a company enhance a property according to their needs,
Yes,
that is improvement.
that is comes under leasehold improvement, and that need to be capitalized separately as a leasehold improvement. The lessee is required to make such payment under the lease. Include the leasehold improvement payment in fixed lease payment if the lessee is required to make such payment under the lease and provide the leasehold improvement are not specialized and could be used by the future tenant. So here two categories of the leasehold improvement. One is, let's say you are a company like Salesforce, Microsoft, EY, and all such big company, right? And you have taken a bare space and you are doing all the leasehold improvement, right? In that case, you'll be capitalizing the leasehold improvement in your books, right? The other thing is that the company from where you are taking the property on lease, they have done the leasehold improvement generally, like co-working spaces, if you have seen, right? They have standard but kind of good furnishing, right? In which any company can just put their boards, signboards and stuff, and then immediately they can start using it, right? In that case of scenario, that leasehold improvement is the assets in the book of lessor. Yes, make sense? Are you guys with me?
Yes, sir.
Right? But they will charge the extra rental or using those property to the lessee, right? Same way, like if you take any house on rent, right? If it is furnished house, so generally rent will be more. If it is unfurnished house, so generally rent will be less, right? Because the difference is for those furnishing rent. Make sense?
That depends upon the arrangement of that furniture. If that is
Yes,
arranged by the lessor, then the lessor will recognize the extra
yes,
cost.
yes,
But
yes.
if lessee itself asks for arrange for a third party to enhance the property, in that case they'll recognize the enhancement
In their
against the
books.
cost incurred.
Yes, absolutely true. That's what I said in initial line. If you are a company like Salesforce, Microsoft, EY, right, and if you are taking any space on rent, generally you take bare space and you do all the customization according to your branding, generally, right? So then it will be capitalized in your books with the EY, Salesforce, Microsoft, right? But other example I have seen, I have shared, like a co-working spaces in which they have done a beautiful infrastructure where any company can come and use it, right? They can just put their signboard and start using it, right? In that case of scenario, the lessor has invested, right? So they have a right to capitalize the leasehold improvement and they are charging additional rent on those leasehold improvement as a furnished apartment or furnished property. Make
Yes, sir.
sense?
Yes, sir. Yeah, makes sense.
So amortization of leasehold improvement, depending on if the assets is to be returned to the lessor, then amortize over the shorter of useful life or the remaining lease term. If the leasee is reasonably certain to exercise the purchase option, then amortize over the leasehold improvement. So if you have done any leasehold improvement, and the lease is for shorter period than the life of the useful assets, then you need to amortize over the lease term. If there is an option which is being given to the lessee and lessee is more certain to purchase those leasehold improvement which you have made, then you can amortize over the leasehold improvement useful life. Any doubts so far on the leasehold improvement side? So far so good?
Yes, sir.
Sanjay?
Yes, sir. Yes, sir.
Okay. Shall we take some break? You guys are feeling drowsy.
Yeah, I guess we can take a break.
So it's 11:30. We can come back at 12. So have some tea, coffee, and munch something. Come back with some refreshed mind. Right. So let's come back at 12 and we'll continue from here.
And sir, when are we planning to end this class? At 1:30?
Yeah, 1:30, yes.
Okay, okay. Cool. Thank
Okay,
you.
let's